The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 13th, Columbus Day and magnificent Monday edition of today's Money Master Show. I'm your host, Steve Rhodes, author of Mastering Probability. Hope that each of you are off to a great start of your Monday. Let's make sure that you and I, that we do all that we can do to have a magical and magnificent Monday. Of course, we should always remember that a relationship is not where you go to get something. A relationship is where you go to give something. And I want to thank you for giving your time to me here this morning. I honor your choices. I'll do everything that I can to assist you and help you understand where the markets are headed to. That means we'll use some of our tools, our A to B equals CD pattern. We'll utilize Fibonacci expansion and retracement. We'll take a look at volume at swing points. We'll take a look at Japanese candlesticks. We'll take a look at the Rhodes momentum trading signals. We'll use it all, folks. And, of course, one of the easiest ways for me to assist you is if you give me a call here at 877-927-6648. Internationally, that number is 727-445-1044. If you got a question, guess what? Somebody else has a question, so don't call in for yourself. Call in to assist someone else. It is Magical Monday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Of course, I did say that it was Columbus Day, right? So we should see kind of a lightish type trading session out here. Was it really Columbus that discovered North America? I think not. Now, is it Leaf or is it Life Erickson? I believe he is the individual that actually we don't celebrate Leaf. I think it's Life. But I am uncertain about that, and I believe it's accounted for that he actually discovered North America 500 years or so before Christopher Columbus. Of course, when he landed, he didn't run into Indians. He ran into a bunch of Canadian hockey players. Yeah, I believe it was Nova Scotia or somewhere up in Newfoundland is the area where he first landed. In that event, let's take a look at where price is landing right now. We've got the Dow. She's trading down 20 points, trading out at a 16,525 area. S&P off about 5 points, trading out at 1901. Composite down 17, trading at 4285. Russell 2000 up 2 points as we speak right now. The DAX is still up. The FTSE is up a bit out here. Goldilocks is up $7. Silver's up 5 pennies. U.S. dollar index is back this morning. Currency pairs, the euro is on the rise. Euro-Japanese yen is on the rise. The Great British Pound is on the rise just slightly. The Japanese yen pulling back. That's what's putting the weakness inside of the U.S. dollar index. So charging to the upside out here this morning, we've got Alnylam Pharmaceuticals, A-L-N-Y. I do not know how to pronounce it, as you could tell. It's up about 15%, up $10 and change. Atlas Energy, that's up 20% this morning. Canadian Pacific, CP, that's up about 3%. Norfolk Southern up 5%. Kansas City Southern up 4%. Rand Gold up 6%. CSX, so the rails are on the move. That's up 13% up there. Siemens up 3%. Vertex Pharmaceuticals up 3%. Rio Tinto up 4.5%. Infosys up about 3%, up a couple of bucks as well. Whirlpool up 1.5%. Let's take a look at Whirlpool this morning. To the downside, you've got Intercept Pharmaceuticals off 7%, down $14 and change out there. Priceline, PCLN off 15 bucks, off 1.5%. Lithium Motors off 11 bucks, down about 13% out here. GoPro up off 8 bucks, down about 9%. Biogen, BIIB off 8%. Regeneron down 8%. Targa Resources down 5%, off 650. Calmaine Foods off about 5%, down 448. Again, 877-927-6648. Let's begin by, I want to do this because I did not get a chance to do this as we were going into the last break. Had a request to go take a look at Microsoft for one of our tigers in the den. So let's go take a look at Microsoft. MSFT is the ticker symbol out here. And our guy in the den is long Microsoft. So let's go take a look at it, see what it is doing out here. Let me get rid of the retracement tools, see if I can do that. Well, let's take it right from about there, see if that, oops, that was probably the mistake. Shouldn't have done that. I think I hit a key I shouldn't have done. Come on, delete. How about that key? There we go. Okay. I believe there's probably a couple other things. If we take a look at Microsoft here, and this is that's a weekly chart that we're taking a look at. So let's take a look at what Microsoft did here last week. Microsoft closed below its market profile low, which was 44.35. Volume last week on a retracement, 165 million shares. That was after making a high with 341 million shares. So we got Microsoft backing off with light volume. So from a bullish standpoint, that is good. I don't know where our tiger is in on the trade and the overall long-term, short-term perspective out here. But from a weekly standpoint, it also was pulling back into a sign of strength from July 14th that had 239 million shares. Again, last week was 165 to the downside. Closed inside that bar from July 14th. When you close inside a sign of strength out here, there's a chance you could pull back all the way to test out the low of that. The low of that would be either that bar, which is out at 42.03, maybe it's the previous bar at 41.05. Those are the areas that I would be focused on. That's a weekly chart for Microsoft. If we take a look at the daily time frame for Microsoft, let's go do that. MSFT, again, is the ticker symbol. Microsoft had just simply huge sign of strength out here, 202 million shares on September 19th as it made its high. Was that a blow-off top? I don't think so. If we take a look at this other sign of strength that it's pulling back into, again, on the daily, that takes us into the July 16th time frame. You're trading inside that candle session right now. That's got 63 million shares. You pulled back into it with 52 million shares on Friday. That does suggest that that is the area where Microsoft will likely pull back into. So I'd be watching, in this case here, the price point of 42.48. That's what it looks like as we speak right now. What I can also say is that as Microsoft was making that high on September 19th, what it was doing, it was making a higher high. It was doing it with less relative strength out here. You can see that by looking at the bottom of my chart out here. And that was an indication that, hey, it wanted to pull back. You would have thought that the $46 area would have held as support, but Friday everything all holy heck broke loose inside of the markets out here. Tech sector really, well, I should say the chip sector really got hammered. But so far, the pullback inside Microsoft seems to be somewhat orderly out there. So that was taking a look at the daily, the weekly. Just for the heck of it, let's go take a look at the monthly chart and see what it is doing, see if there's any kind of signals out here. Now, on a monthly basis inside of Microsoft, we have not seen a reversal signal in quite some time. The last time we saw one was back here in July of 2013. Now, got a lot of time left in the month. It's only October 13th out here. However, if you are to see a close below the open of last month, which is 45.43 out here, you'll have a monthly reversal signal, bearish engulfing candle session inside of Microsoft out here. But you do have some pretty good volume, so you're going to have to really keep an eye on Microsoft and what it wants to do. Just make sure that you keep some stops in place, no matter what time frame it is that you are trading. And that was ticker symbol MSFT. Now, let's go take a look at what's going on inside of the ETF structures out here. So we've got the IWM, that's up 9 pennies. Let's take a look at the Qs. Let's start off by looking at the QQQ ETF. It's off 56 cents right now, trading out at 93.90 out here. Let me do this. I got a lot of stuff on this chart here. I don't want to clean this up. I don't know what else I would mess up if I do that. Let's take a look at this is the monthly chart. Let me switch over to the daily chart out here. We take a look at the daily chart for the Qs. We take a look at what took place on Friday. 77 million shares to the downside. Big volume to the downside. That 77 million shares coming into a swing point from August the 6th. That's your swing point low. 34 million shares are down there. So it looks like the Qs are going to go ahead and test that low. The low is going to be 93.92. So far, I'm sorry, that's not the low. The low is, that is the low, 93.92. You're at 93.78 right now. So we're testing that low out here. That had 34 million shares. Today you've done 16 million shares. We've done that in 45 minutes of trading. So it's taken on a swing point with volume out here. Now, inside of the Qs make bottoms with high volume. And on Friday, that in essence is what we got. We got a nice high volume. It was really the second high volume-ish type low on this pullback. The first one came in right here on September 25th, and the volume was a little bit sketchy, 68 million shares, still pretty good volume. On Friday, we had even more volume out here, 77 million shares. If you just simply go back and you study the QQQ ETF, you're going to find that it makes bottoms. Doesn't necessarily be that day, but does make bottoms with lows out here. It's another signal that the market is looking to form a bottom inside of the marketplace. So at this stage here, it's taking out that swing point. If it takes that swing point out, where is price likely to head to? I guess what we do is we take a look at the A to B equals CD patterns out here. Inside of the Qs, I would have to say you'd have to, at this stage, go with your A point being the September 19th high. That's the only logical swing point. Your B point would be October the 2nd, and your C point out here looks like October the 6th. 1-to-1 A to B equals CD. That's what it has already done here this morning as it's completed that pattern, but no reason that it cannot move down to 92.88. Right now you're trading at 93.86. That's what's going on inside of the QQQ ETF. If we take a look at the IWM, the IWM being the weak link in the marketplace out here. What has the IWM done? In essence, it's done a 1 to 1.272 A to B equals CD to the downside. Yeah, it's trading up a few pennies, no reversal signal or anything along those lines. That would be a different story if we were to see a close today above 105.77. Now, the problem inside of the IWM is there is a consolidation pattern from 107 to 120. And typically, when you break a consolidation pattern, you see a measured move equal to or greater than that move, that consolidation pattern. So it is very possible that the IWM wants to trade 13 points below 107. What would that get us to? That would be 94 buckaroonies. You're trading right now at 104. What we have. Here's the thing. It's so strange is that you can take a look at the trading session of October the 8th and say got out of the consolidation level the day before, got back in, came back out. I suspect we're going to see more chopping around out here. But if, in fact, the IWM gets back inside the 107.14 area, well, then what you've got going here is a butterfly pattern. That butterfly pattern is a 1.272 butterfly. What I mean by that is if we take a look at the expansion of the following set of swing points out here, let's use the swing point from February 5th. Let's use that as your swing point low. Your high that what took place here inside the IWM, that was on June the 30th. Your 1.272 level is 103.54. So at 103.54, we haven't hit that yet. At 103.54, so far our low has been 104.22. We're kind of in that range, but at that level, that would give you your 1.272 butterfly. If, in fact, you see a reversal signal that takes place today, tomorrow, the next day, then you're looking at a fairly decent retracement that will or should take it back inside its consolidation. If it just gets back up there and it tests that and it cannot get back inside there, then that says that the 10-point move into that 94 price point area is likely the place for the IWM to head to. We get back after this first break. We'll go take a look at the SPYs, the diamond. We'll go take a look and see what's going on inside of the S&P 500. In fact, we'll go see which of the sectors is the weakest, which one is the strongest. This is Steve Rhodes. This is TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 42, S&P down about 9 points right now. Let's go back and take a look at the SPYs and the diamonds. If we take a look at the SPY, trading off about 90 cents right now at 189.67. What do we have going on inside of the SPY? Well, number one, it is below the August 7th swing point out here. That August 7th swing point, that low is 190.55. Volume there was 135 million shares on Friday. Price moved down into that level with volume 221 million shares. If you break below, well, let's see here. There is a 157. 221. So on Friday actually confirmed an A to B equals CD to the downside inside of the SPYs out here. If we take a look at that pattern out here, the A point's going to be your swing point from September the 18th. That's going to be your A. Your B point should be October the 2nd, that low, and your C point a little 2-day rally up into the high on October the 6th. 1-to-1 A to B equals CD would take you down to a price level of 188.10. So you're 189.56. Intercession, you could easily see a move down into that area. When I say confirmed, what I'm referring to is the B point out here from October the 2nd at 157 million shares, and on Friday it was passed with 221 million shares out there. That combined with the fact that you're trading below the August 7th level, which also had 135 million shares, that was taken out with volume. That could also be setting up a butterfly pattern. The 1.272 butterfly, that would, if we go from the swing point low from August the 7th to the high on the 19th, 19th. Your 1.272 butterfly takes you right into that area. So it could be butterflies all over the place here, including inside your stomach. Looks like the 188.10, 187.48 area. That's where you would take a look at that potential butterfly pattern that would be sitting up inside of the SPY. Let's take a look at the Dow diamonds out here. You got the diamonds down 56 cents, trading out at 164.63. The diamonds here, its swing point from October the 2nd, that had volume of 9 million shares. That was taken out on Friday with 12 million shares. It's 1 to 1A to B equals CD, though. That just takes you back into the swing point from August the 7th. The low out there is 163.13. The high is 164 and change. You are at 164.62 right now. 164 and change was 164.89. That's got volume of 5 million shares. Shoot, today it's done 3 million shares. So you still have volume in the marketplace on a kind of a light-ish trading session out here, with it being the Columbus Day holiday out there. We should all be out golfing or doing something outdoors. What are we doing inside here? Well, thank you for spending your time with us here at TFNN. So that's what's going on inside of the diamonds out here. Likely they're going to go make a run for the 163.13 level. That is the low from August the 7th. If we compare the sectors, here's a little chart I've got up on my screen. So the S&P 500, you've got 9 sectors. In the upper left-hand corner happens to be the number one weighted sector out there. That is the XLK. Underneath that is the financial sector. That is the XLF. Below that is the healthcare sector, lower left-hand corner. In the center there happen to be sectors 3, 4, and 5 out here. XLY, the consumer discretionary. XLI, the industrial sector, and the consumer staples, the XLP. And then in the upper right-hand corner, you've got the XLE. That is the number 6 weighting structure inside of the S&P 500. Materials are number 8. And number 9 is the utility sector. From a weighting standpoint, it helps you understand. I believe the XLK is about 21%. The XLF, I don't recall off the top of my head. But you can go to SPDR Spiders, just type in Spiders Trust, and that'll take you so you can take a look at on a daily basis what the weightings are inside there. Now, why is this important? Well, it's important to understand what's weak and what is strong out here. Inside of the S&P 500, what is holding the S&P 500 up as we speak? You can see with technology being the weakest, well, technology is now below that blue line, the horizontal line going across my screen out here. The blue horizontal line is the swing point from August the 7th. And we can take a look, and we can see that technology sector on Thursday, on Friday last week, got below its swing point from August the 7th. What has been holding, what has been putting strength into a weak market out here has been the financial sector and the healthcare sector, the XLV. That means we really ought to go take a look and see what the top 10 holdings with inside those sectors, what they are doing out here. But you can see those two are still above the August 7th level out there. If you take a look at the next 3, the consumer discretionary, the industrial, and the staples level, well, you can see that the consumer staples, oftentimes considered to be a bullish area to move to in a bearish-oriented type market, a place of safety out there. Consumer staples, well, you can see it's well above its swing point. Likewise, for the consumer discretionary, it is below that August 7th area, as is the industrial sector. Of course, we know the energy sector, that's been failing miserably out here. That is all the way back into the February lows out here, into the February 5th level. This is Steve Rhodes. This is TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 45 this morning. S&P is down 10 as we speak. So before we went to break, we were taking a look at this chart that I put together here for the S&P sectors, just to give you a feel for what is strong, what is weak out here. So I mentioned the financial sector. Again, if we take a look at the top three weightings with inside the S&P 500, you've got technology. XLK is back below its swing point from August 7th, but not the case inside the financials, inside the healthcare sector. So let's go take a look at the top 10 holdings, or some of the holdings with inside there, and see what they're doing inside the financials and inside of the healthcare. I don't know that I've got the weighting. If this is not the current list of top 10. It may have changed just slightly. But let's take a look at Wells Fargo. Wells Fargo was flat this morning. Wells Fargo may be the number one holding inside of the financial sector. What do we know about Wells Fargo at this stage here? Pulled back on Friday with 20 million shares, made a high back on September 19th with 22 million shares. No big, huge volume here coming out of Wells Fargo. If we take a look at its retracement from low to high, well, that didn't work real well. We're going to try that one more time out here. The retracement from low to high, that means we're going to take a look at the trading session on August the 8th. There we go. Up to the high that was put in on September the 19th. What it's done, it's done a 0.618 retracement. I'm sorry, a 0.786 retracement. 50-40 was that number out there. If, in fact, Wells Fargo is able to hold here because it hasn't had any major volume on this retracement here. It could actually be making a run for its highs once again out here on September 19th. So at this stage, Wells Fargo has held up pretty well. Maybe was at one time the number one weighting structure inside of the XLF out there. Just again, go to Spiders, SPDR, and you can go on and you can actually dig down and find out what the top 10 holdings are. U.S. Bank Corp, that's up 6 pennies here this morning. It's trading out at $40.13. Let's go see what U.S. Bank Corp is doing as we speak. Looks like I'm overloading my system out here. Now, U.S. Bank Corp weaker than Wells Fargo for sure, because if we take a look at its August 7th swing point, you got below that level. In fact, that could be just a small A to B equals C to the downside. That at 5 million shares on August the 7th on Friday, down with 9 million shares. So U.S. Bank Corp is one of the weaker of the top in the top 10. We've only looked at 2 as we speak thus far. Right now, you've got it trading back into its level of potential level of support down here around the April 16th time frame. 15 million shares was down there. You approach it with 9 million shares. So it doesn't look like U.S. Bank Corp here is exactly completely breaking down, just more consolidating than anything else, and it's down towards the bottom of its consolidation range. If you take a look at that consolidation range, you just go ahead and say it's been consolidated in essence since about February 2014, anywhere between the $40 level and 43. So about a 43-point about a $3.75 consolidation is what U.S. Bank Corp has been traveling within. Let's see, what do we have out here that's behaving well today? How about Berkshire's up $1, but that's on a $137 stock. It's still up 0.7%. Let's take a look at Berkshire. BRK.B is the ticker symbol. Let's go see what this equity here looks like. See what kind of volume this thing had in it on Friday. So Berkshire's got a confirmed A to B equals CD to the upside. That should take it to 144.33. So that has not completed. Friday session, this is a daily chart that we're looking at. The pullback here that it saw the most damage was October 9th, 6.9 million shares. Friday, only 4.8 million shares. So far today, 800,000 shares. It's back above its market profile high. It does look to me it's got a high volume high back on the September the 19th. So it looks like Berkshire, BRK.B, wants to make a run for the 144.33 type area. What else do we have out here? Let's take a look at J.P. Morgan. J.P. Morgan's up 0.5% this morning. JPM is its ticker symbol. And then we'll move on to the healthcare sector, get a feel for what's going on. Inside of J.P. Morgan, it completed a 1 to 1.272 A to B equals CD. As it has pulled back, it's pulled back not too shabby out here. The trading session that it's trading into as we speak right now is October the 2nd. That makes a lot of sense. There was 24 million shares on its pullback, and on Friday it closed below that level with 16 million shares. So that was 16 going against 24. Not exactly like it had a lot of esteem out here. But again, continued closes below the price level of 58.61. You're at 58.84 right now. That would set up an A to B equals CD to the downside out here. But for the most part, for all intents and purposes, J.P. Morgan looks pretty decent out here. Let's go take a look at what's going on inside of the healthcare sector out here, the XLV. Looks like that is under a little bit of pressure this morning. You've got Johnson & Johnson, J&J, that's off 1%. I don't see, in fact, anything that is in the green inside of the top 10 holdings inside of the healthcare sector. However, we do take a look at, let's look at what's got the most damage in it right here this morning. It looks like Biogen and Celgene, both off a little over 3%. Let's take a look at Celgene. CELG is the ticker symbol. That's off 3.5% this morning. Let's go see what kind of volume is behind its move. So you got Celgene taking on its September 15th swing point. That has 4.9 million shares. It's done 1.7 in a little over an hour. So my math says that it's pulling back into that level with some volume out there. 5 million shares was on September 16th as it tried to break out to the upside out here. So what is Celgene doing? Well, we know we've got at least a double top out here, so we know we at least have a consolidation high. So that is in place out there. And that's right at a price level of about 96.40 or so, right in that range. Now is the question is where's really the consolidation low with inside of this equity, because you're trading now below the September 15th time frame. Let me pull this back a little bit further. see what kind of information that I can get inside of Celgene out here. So it's got a pretty decent base of support. You'd have to say that Celgene breaking close and below September 15th low at 86.22. That would say that it probably trades back into this little sign of strength out here. And that takes you all the way back to June 19th. That sign of strength out here had volume of about 11 million shares. So 11 million shares are really two signs of strength. The first one was the day before, which had 8.6 million shares. So you'd have to say that the price range of where Celgene is likely to pull back to, it may find some support at 86.20. If it does not find support there, then most likely 81.61 would be its number. CELG is the ticker symbol. Let's go take a look at Biogen, BIIB. That's off $10, down 3.5% this morning. Let's go see what kind of volume is behind its move out here. And remember, this is one of those sectors that had held up or has held up to this point pretty well in comparison to the other sectors that are out there. However, this morning you're trading at 304.16, volume of 336,000 shares, taking out its most recent swing point from September the 15th that only had 1 million shares. So roughly, still mathematically, it is a larger volume. So what this is also doing is coming back into a sign of strength out here. This is ticker symbol BIIB. It had a sign of strength on July 23rd. There was 4 million shares to the upside. I can say that it's pulling back into that with lighter volume. So in the case of Biogen, it ought to find support anywhere between the high of 308.68 down to a low of about 298.31. That is likely where Biogen is headed to, BIIB. Let's see, what else is inside this healthcare sector worth noting or taking a look at out here? Down percentage-wise, you've got Merck is off a couple of percent, and you've got Gilead. So let's take a look at MRK as the ticker symbol. Let's go see where this is headed to as we speak. Come on, I'm seeing I've got some kind of a data slowdown feed issue, so that's never any fun out here. Nonetheless, Merck is down at 57.30, 3.4 million shares. It's back below its it's October 2nd swing point low of 8 million shares, so it's pulling back with a bit too much volume out here. That would say that Merck ought to come back and at least test the August 7th area, and that is anywhere between 55, 57, and 56 out here. That's what's going on inside those two sectors and some of their holdings out here. So I take a look at what's going on sector-wise. So it's the financials that are holding up pretty well. To the downside, or to anything else that's green with inside here, you got Freeport, McMoran, Monsanto. Boeing's up a bit. United Technology. You've got Philip Morris and Walmart out there. Let's take a look at some of these mining equities out here, because you've got gold was up about $8 last time I checked. Let's see what it's up right now. It's up $10, so $10.20. Silver is up 12 pennies out here. So Goldilocks is going to capture the attention of many, many people, and then you ought to see the mining equities just simply take off like a rocket ship out there. If we take a look at gold, 1232 is where it's trading at right now. Let's go ahead and blow up gold, and I mean blow it up so I can see it on my screen a little bit better. What gold is in the process of doing is trying to take out a B point with volume. Now that B point out here is October the 9th. There were 192,000 contracts that traded that day. So far, you've done 121,000. So it's starting to get the energy. Any close above 1234 today, certainly with more than 192,000 contracts out there, then you've got a confirmed A to B equals CD to the upside inside of gold. And that is what it is trying to do out here. Silver right now just really along for the ride. But let's take a look. Let's go back. Let's take a look at Rand Gold. We saw Rand Gold was really trying to do the same thing that we just looked at on gold, which was take out its swing point. It's got the volume. Well, the volume it needs is more. It needs more than 1.6 million shares. You've done 435,000 in 1 hour and 15 minutes worth of trading. So it should have the volume to blow away that B point. Price-wise, hasn't done that yet. 70.39 is the number. So far, it has hit 70.52, and it has pulled back. But it looks like Randgold Resources trying to bust out its most current swing point high out there and set up an A to B equals CD to the upside. Also, you've got Gold Corp. Gold Corp is up 37 cents right now. Now, Gold Corp is not as strong as Randgold Resources because at this stage here, the swing point that we're dealing with inside of Randgold was the October 8th, October 9th area, and inside of Gold Corp, it is just struggling. It's up a little bit, but it is struggling. It's got resistance at 24.62. It would do itself a big, huge favor to get above that 24.62 level. If we take a look at Barrick Gold, ABX is a ticker symbol. It's done 3 million shares today, up 15 cents. This is this is much weaker than Randgold Resources. Why do we say that it's weaker? Well, if you take a look at that sign of strength that these equities had inside of, that was on the trading session of October the 8th. And if you take a look at Barrick Gold, nice looking candle session, 20 million shares to the upside out here, but price pulled all the way back down, in essence, to test that area back on Friday. It was a pullback on light volume. That was 11.6 million shares that was going against 20 million shares, so about half the energy on the way back down, but not as strong a looking stock chart pattern as Randgold. If we take a look at Freeport-McMoRan, it's up 34 cents out here. Freeport-McMoRan closed below a hammer candle out here. Never a good thing when that takes place. It had a hammer candle on October the 2nd. And price closed below that level back on October the 9th, moved a little bit further on Friday. This is a weaker than market stock with inside the gold sector out there. Not that it can't take off topside, but it is weaker than certainly Randgold. Let's go take a look at Gold Fields out here. GFI is the ticker symbol. Let's go take a look at it right now. If you take a look at GFI, this is stronger than some of the other symbols that we just took a look at. What do I mean? You had a nice big key reversal session inside of October the 8th out there. The pullback on Friday, much weaker than volume-wise, 4.7 million shares on the pullback versus 7 million shares to the upside out here. It's trying to take out a swing point today. That swing point is the high from October 8th. That price level is 401. 7 million shares. You've done 1.4 million shares. If you can get above that, you've got an A to B equals C to the upside. You probably have resistance right around $4.19 out there. Question about two other stocks out here. We've got Rubicon Minerals, RBY is the ticker symbol. Let's go take a look at Rubicon, see what it is doing. RBY is the ticker symbol. This is stronger than Barrick Gold, stronger than Gold Corp out here. Nice key reversal session as well on the trading session of October the 8th. Volume to the upside, 2.2 million shares. To the downside on Friday, 813,000 shares. It's trying to take out its swing point from October the 9th. That's got 960,000 shares. You've done 210 in an hour. Multiply it times 6. You can, if you can get above it, it's at least moving into that swing point with volume. Market profile low inside Rubicon is about $1.29. You're at $1.28 right now. Getting back inside there, says 137 is next, and 143 would be on its glide path out here. I had a request to go take a look at Allied Nevada. ANV is the ticker symbol. Let's go look at that for Mike in the den. We take a look at Allied Nevada. It looks better than Barrick Gold does. Didn't get any kind of key reversal symbol, though. That's the only problem out here. We get back. We'll take a further look at Allied Nevada. This is Steve Rhodes. This is TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 35. S&P is down 10 points right now. Before we went to break, we were taking a look at Allied Nevada. Ticker symbol is ANB. As we take a look at Allied Nevada, it's one of the few equities that back on October the 8th, had a nice bounce, but did not have a bullish reversal signal. It did not have a key reversal signal, bullish engulfing, anything along those lines out here. All it did was it just bounced, with the market. So this stock here, as I take a look at it with regard to such an assortment, you've got 30, 35 different mining equities that you can take a look at out here. Look, it'll go along with the sector, or should go along with the sector out here, as the sector forms its bottom out here. But at this stage of the game, short of anything other sort of something else that takes place inside this equity, it is a weaker than the general sector. As an example, here's ANV. Let me can't do that here. Let me do this. See if I can do this. I can do anything, right? So let me take this, a link. Let me add a new chart out here. New chart. And, oops, didn't mean to add the second one. That was a market depth. Okay, and here's another chart out here. So let's put, as an example, we'll put side by side. Give me a moment to do this. So you got A and V on the left, and let's go take a look at Rand Gold as an example on the right-hand side here, so GOLD. And if we take a look at Rand Gold, if you take a look at Rand Gold, let me open this up here. If you take a look at the trading session here of October the 8th, see how that candle session, see that was a nice big key reversal session. It was able to overcome its prior day's downside action out here. And then when you take a look at the retracement, the retracement on Allied Nevada, okay, not too bad thus far. But the signals are just simply better with inside of Rand Gold out there. So if you are inside Allied Nevada, as you should with anything that you might trade out there, just make sure that you've got some stops in place. Inside of, and I would have to say those stops should be below the low of the October 8th trading session and anything that you're trading out here inside of the mining equities. So, all right, let me round this up for you. So what is it that Stevie believes the market is still trying to do? And I think I'm the only one in that camp out here. Still go back to this stock chart right out here. If we take a look at the summation index for the New York Stock Exchange, the New York Stock Exchange certainly got hammered as well on Friday. But as hammered as it got on Friday, on Thursday and Friday last week, it has still got a pricing price oscillator out here. And we can go back I've gone back as far as I can inside the New York Stock Exchange to find an example where there was a rising price oscillator, especially while it was below zero, as we've had here this time around currently, to see if I could find one that had not formed a bottom, at least a short-term bottom, if not a long-term bottom. Most of those were long-term bottoms in the marketplace. And so I take a look at the New York Stock Exchange. Look, I am of concern inside the New York Stock Exchange. For example, if I take a look at the weekly chart for the New York Stock Exchange and the monthly chart for the New York Stock Exchange, what concerns me the most is the mere fact that we are now trading below the October 2007 high out here. And so with the New York Stock Exchange, I have mixed messages out here. Now, the only thing that is really mixed is, oops, I missed that by a little bit. 10,287 is the number. 10,287, let me give you the exact number. 10,387. 10,387.17. That is the exact number out here. However, the month is not over. So if the New York Stock Exchange continues to trade below that, then I'll have to throw in the towel on the market trying to form a bottom here. And right now, it is trading below that. I still believe we're going to see a significant bounce at a minimum, but we may see a significant low. Stay tuned, folks. Our man Basil Chapman is up next. It is Magical Monday. Have a magical day. I look forward to seeing you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.